Hello traders, Stacy Burke in the ACB Masterclass. And in this module, we're going to be going over and covering mastering the best setups. How should the best ACB templates set up and present so there is no analysis paralysis? Which ones are the best ones of the best? And also so that we actually have an ACB template setting up. So we've talked about our basic criteria, just the simple method that looking for markets that close in breakout at the high or low close of a week on a Wednesday, 4:59 p.m. We'll review those criteria again. But I just want to cover this early and sort of get into the headspace of understanding being patient, not just looking for a market that closes in breakout and then getting in and then saying, well, it didn't work, or how should it set up? And, you know, we've put up multiple examples, but we'll go into this in depth. We'll try to break this down and find different instruments each month offering at least one 5-star ACB, and then just setting the headspace to really hit home that it's about allowing the markets to set up and not having to try and trade all the time. These trades are the ones that will wipe out an entire day with one go, and in the best of the best, wipe out an entire week. Nothing is ever guaranteed. But what is it that can potentially be behind a large move like the monkey hammer versus a one-day hammer? Well, obviously, breakout traders being in the market, whether they're on higher time frames, on trend trading, getting on board, or whether they're smaller time frames, trading with the trend or holding positions, or breakout traders being triggered on longer time frames, but that illusion of the trend being intact or whatever that may be. But when they close in breakout, that can be a stop hunt, or that can be the ACB day setting up for the stop hunt in the other direction where they wipe out the market. And a lot of times those can come after closes in breakout from an extreme, a low close of month or high close of month. And that is the alert to a potential opportunity setting up. Challenges that often come up is that we have instruments that show up on our watch list, but we come to the screen maybe in New York session and it's already moved in Europe or London, or it's already moved in Asia, or there's major red news on the schedule. Now, this is a really important aspect for this particular module and video in that I want to empower traders with building their muscle memory. That's the most important part of this module, is recognizing what a 90-10 ACB template looks like, how it can show up on our watch list on the longer time frame on the daily chart, the significance of when it shows up on certain days. As I've talked about, 90% of these are probably going to be on a Thursday and occasionally a Friday or a Tuesday. You might even see one on a Monday. Now, I want to reinforce the simple model that I'm showing my sons is Wednesday close in breakout at the high close of the week or month, and looking for the Thursday ACB template. But obviously we are going to have other ones that show up at the beginning or ends of months that are textbook perfect opportunities. And there's going to be a modus operandi as to why these markets may set up into a high impact major red news release. And that can be related specifically to a country and currency. For example, the euro may have a rate release announcement, or a high impact flash services PMI release. Or we may have an instrument that sets up and it's a cross rate pair, the euro Australian or pound Australian. And there's an Australian high impact major red news release or euro earlier in the week, setting up for a backside, or even on the backside of a week heading up into the new month or end of a month. So I just want you to be aware of that. But more importantly, it's about recognizing what a perfect template looks like, which is designed to go to the close. ACB means ain't coming back. So number one, how does that come up on our watch list? Well, we've just reinforced that. It's closing in breakout at the extreme, high or low close of the week or month. How it should behave on the day into the timing window. And that's what this is about. How does price behave? Now we have our coil, but traders are going to just get in on coils everywhere. And meanwhile, they might be in a day that's pulling back or consolidating, or it's an inside day. The best of the best will break out again and trap traders on the breakouts, or allowing institutions to be flipping their books and rolling them over, which is where the understanding of the higher time frame, the 4-hour rotation, comes in. How should price coil? How should it behave? Entry, stop, behavior of price. Once we're in the trade, how should this trade behave? How should it behave? And as I've repeated in several videos, price should already be moving into profit without any stress. That's the whole point. Zero thinking, taking a trade, putting a stop in. Zero stress, zero emotion, no sweat, not glued to the keyboard, hoping that it lets us out. It's already moving into profit. That's how these trades should behave. We have a sideways coil. All time frames are driving these moves. Now we're going to go through some different examples in different sessions. We're going to look at pairs that have moved in Asia. We're going to look at pairs that have moved in London. We're going to look at instruments that give us the New York session all-in opportunity. And we're going to look at setups that play out perfectly even with major red news on the schedule. Now coming back to not getting in front of certain high-impact major red news releases, but also be willing to position myself with a starter. This is my choice. I'll position myself with a starter and a stop on red news that I see in the perfect engineered template as being the catalyst to accelerate the move or to keep traders from getting in until later, giving retail the choice to chase a move already in progress. And when it's a perfectly well-engineered ACB template, which is what this module is about, the best setups, having the confidence to be in that trade and leaving it till the close. And we'll start with just the NASDAQ. It was one of the best ones. This is August of 2023. Three lower closes breaking out of the month. We have a month that when it starts, it breaks down inside and continues week 1, week 2, taking out the low of the previous month and then bursting in 3 explosive moves to the low of the month and taking out a lower level from a previous month in June. Closing sideways, 3 lower closes, and then we have an explosive reversal on the Monday, closing in breakout of the low extreme. 1, 2, 3 to the high of the closing and breakout from the previous week, closing and breakout. Again, that's a Wednesday close and breakout at the high close of the week, and we go to our next day. Now, this is a U.S. market. I'm only looking for this setup in the U.S. session, the New York session. NASDAQ, U.S. market. We have a market now that's broken the previous high of week level. It's closed in breakout, and it's the high closing price of the week on Wednesday, 4:59 p.m. Closed in breakout on Monday. Made higher highs, a range expansion higher, coiling and exploding on the Wednesday and closing in breakout, taking out the previous high of week level. Immediately in the new day in the Asian session, the market breaks out again. It breaks out again and trades higher. It triggers the high of week, high of day level and continues to trade higher. It breaks out, which is an excellent criteria, which I use the expression the double tap. It breaks out again, and that's one of the key things. If a market breaks down inside now, that's not triggering new breakout traders into the markets. It's not carrying higher time frames higher into the new day. But then that move exhausts and trades sideways. And this is where I talked about understanding that if we look at our weekly chart, that each week, one of those high or lows on a 4-hour chart will form the extreme of a week. And this can help our understanding of when a market is changing potentially to reverse at the extreme, and how timing, why I mentioned in some instances, some traders are always forced missing out because they're chasing the move into the open of a session or into the in this particular case, the NASDAQ, whereas up high, when we have our coil sideways, we've closed in breakout, and we have a new 4-hour rotation starting, heading into our 6 a.m. start just prior to our U.S. window. But more importantly, just understanding that each week, one of these extremes, unless the market continues to trend, which in that case we would not have a setup because it wouldn't be coiling sideways. But that 4-hour rotation, when we understand timing and we have a setup, can allow us potentially to have an early opportunity, early, when I say early, on gold currencies indexes, they're already trading. But for the NASDAQ specifically, 9:30 is the New York Open. And often cases, my personal opinion is that the institutions are loading up first and they dump it into the open, where retail now is forced to get a worse fill price or chase that market. But we have our monkey hammer template up high. We have 1, 2, 3 higher closes at the extreme. The market breaks out again, coiling sideways and into our 5-minute window or our 1-hour window. So we have our market that's in breakout, breaks out again and coiling sideways. I'm just going to break this down so simple understanding. This coil sideways is now potentially setting up. We get our new 4-hour candle starting at 6 a.m., pumping and breaking down and coiling sideways at closing price. So remember, we had the breakout candle. We have breakout traders in the markets. If we break through that level, which we did, we've pinned through, that breakout now has failed. That breakout now has failed. And our next area, if this market is potentially now going to explode, is heading back towards the low of day level. We have our coil now heading into our 9 a.m. hour, and just prior to our 9:30 New York Open, this market has a beautiful sideways coil into our EMAs, representing all those time frames now rolling over. That's the indication that we're already coiling for an explosive move. And then when New York opens, traders are forced to take a first bar entry, which is further away as that market just continues to free fall now back through the low of day level. Remembering, even on our 1-hour chart, traders can position themselves with, as I've mentioned with my sons, take a position, put a stop in place, and walk away. Now, on the 1-hour chart, that's the max stop loss, whether a trader gets in at the close of 7 a.m. at 8 a.m. or they get in at 9 a.m. with a close above the 8 a.m. candle. It's just, that's how simple this can be. Now, obviously, on the smaller time frame, we're looking for scalability. But the sideways movement, we've triggered new breakouts. The sideways movement, and then the collapse, explosive collapse right into the New York Open, and the continuation with the New York Open of the market all the way through the low of day level into the close of the day. Now we're looking at the Euro-Yen daily chart, August of 2023. Now, just to repeat, one of the things I really want you to get out of this video is understanding higher time frames and just recognizing when markets close in breakouts at the highest or lowest closing price of the month or week, and understanding what that signal can mean, whether it's on the inside of a close of a week and it's a Wednesday, or the high of a week or month. And then also when we have a market close like this on any day of the week. Now, this is a Wednesday closing and breakout high close of the month on the daily chart. It comes up on our watch list. And I'll walk through each section, each setup, in that we'll look at the daily, the 4-hour, the 1-hour, and of course the 5-minute, so that traders can reinforce and build their muscle memory when these opportunities come up on our watch list. What is the significance of closing at the extreme, and how does price behave? And then understanding 4-hour rotation, hourly rotation, because we can also use those time frames as an opportunity to position ourselves in markets and also manage our risk with the ACB understanding. So for example, even on a 4-hour chart, if we were to take an opportunity on our smaller time frame, recognizing where these levels are, and a worst case scenario stop loss, if you're just going to put a small position in or a smaller position in, depending on if there's major red news or whatever variables can happen. But remember, we're on the closing price of Wednesday going into a Thursday session. Now, this particular pair comes up on our watch list. For traders who are in Asia, they're going to have instruments come up on their watch list, the same as anybody else, New York and London traders. But for traders in the Asian session, they will be looking for instruments that can potentially set up into the Asian window. So we have our market, it's closed in breakout at the highest closing price of the month and week on Wednesday after closing in breakout. When we go to our hourly chart, we have a market that coils sideways underneath of the extreme. So coming back to understanding our higher time frame, now we have a potential 4-hour reversal already in place, meaning that when we head into our new 4-hour rotation, we may already have a coil on our smaller time frame in the Asian session. How is price behaving? We'll zoom in here a little bit so traders can see this a bit better. If we just 1 hour, 2 hour, 3 hours, and 4 hours, we have a market now closing at the extreme close of the day as we head into our new 4-hour candle. Remember, we're in the Asian session. This market has broken out of the high of week level, taken out the high of month, and closed at the highest closing price of the month. We already have breakout traders in the markets. And so how does price behave on our smaller time frame? The coil sideways inside of our US session. Each opportunity into this trade has a max risk of 15 pips, a maximum risk of 15 pips. Each session has an opportunity to position themselves into an ACB all-in reversal that started in the Asian session. An ACB reversal where the collapse started in the Asian window. Now in this particular example on the Dow Jones 30, this is September of 2023, we'll try and walk through each month and look at some of the highest quality ACB templates. On this particular setup, the market closed in breakout at the high close of the month, but this was actually a Thursday heading into a Friday. And just coming back to some really simple things, noticing that the market had dumped down first without taking out a monthly high or low. First green day, and gradually pumping its way back up. 1, 2, 3 higher closes. Monday, Tuesday, Wednesday, exploding and closing on Thursday at the high close of the month and the week. Walking through our 4-hour timing window now, we can see we've taken out the high of the month, the new month, coiled into the close, broken out again, and gone sideways. So understanding time rotation, and that typically on a normal week, one 4-hour candle will form the extreme on one side and one 4-hour candle will form the extreme on the opposite side. Doesn't always have to stay that way. The next week, the market may continue to trade higher or lower, but when a week ends, we typically have an open, high, low, and close, same as any other time frame. So depending on how this template sets up, the 4-hour extreme gives us information that if it's coiling into our window with the setup, that the 4-hour rotation now can give us the confidence of entering into a coil on an index prior to the 9:30 open. Now this particular case, we have our extreme close. We've broken out again. We'll go to our 1-hour chart. Now our 1-hour chart breaks out again, which is one of the things that I like to see because we're triggering new breakout traders into the markets and then coiling. So we want to see breakout traders enter in again on that new day. That triggers new breakouts, and thinking timing rotation now. As we head into our 6 a.m., we get our large engulfment at the extreme high close into our new 4-hour rotation as we head into our U.S. session. Paying attention, we have Monday, Tuesday, Wednesday, and an explosive pump back to the high of the month on major red news, closing in breakout. Major red news was core retail sales, PPI, and unemployment numbers, but smoke and mirrors to me, because this is the pump back to the high of the month and our perfect setup heading into our US session. So recognizing, just in terms of building our muscle memory, remembering that this close and breakout at the extreme is our signal. But most importantly, how did it get there? And also, how does price set up and behave into our timing window on the Friday? This is a Friday. As I mentioned to you, I'm training my sons to look for this setup on a Thursday, but we have this on a Friday, and this is still the same setup, just one day later. We have a new breakout. This is our 5-minute chart. We put a high of day in place in our London window. We pump back up. Our new 4-hour rotation starts to break down. We pump up. We have 8:30 major red news, Empire State Manufacturing Index, and 10 a.m. pre-U of M. Now, as I've mentioned to you, this is a perfect template. I will get into this trade. I will get into this trade and have a starter in minimum Even though we have red news on the calendar, as I've talked about before, we have a perfectly engineered template where news can now act as a catalyst to complete the move on the backside of the week. And you'll see where now, as I've mentioned, this can be an area where institutions are loading up and they dump it down on the news into the New York Open. Remember, we have breakout traders in the markets. They pump it back up into our 10 a.m. new 4-hour rotation. We have another opportunity to enter this. This is the best fill for traders that have waited now until after the news to position themselves in the market for the move down. The new 4-hour rotation after the 10 a.m. pre-U of M has been released. 10:05, we have our engulfment. We have a coil, which we'll see in a moment. But this is an example of where they dump it into the open, and now retail's inside, forced to try and take a trade. But the smart traders will align themselves with the new 4-hour rotation in the coil for the completion of that move. The news is the smoke and mirrors and the catalyst to continue that move back to the low of day. When we look on our coil, again, the early entry is up above closing price. We already have our high of week and month. Our thesis is it's already locked in. Getting into the market, if you're scaling into this trade, managing your risk, if you're just taking a position, putting your stop at the extreme and walking away. Once we have our New York Open pinning into the high of day breakout level, walking away and letting the trade play out. Looking at the euro, and in October, we have an instrument that's closed on Wednesday at the high close of the month and the week, showing up on our watch list heading into our Thursday session. Now, this is a case scenario where we have CPI scheduled on our Thursday into our U.S. window, 8:30 U.S. time. And so, of course, though more importantly, looking back at the template to recognize again, building your muscle memory, what a well-engineered template looks like. So we have non-farm payrolls the previous Friday, first Friday in the new month, closing in breakout. Monday's an inside day, and on Tuesday it closed in breakout again. Wednesday breaks out from the high of week level, closing right at the extreme. So understanding, if we went back and look at our daily time frame again, just a simple understanding, we come down and put in a low of month, first green day, 1, 2, 3, inside day, 1, 2, 3, again to the high of a previous week, closing at the extreme on a Wednesday. The market's in breakout on Tuesday. We closed in breakout on non-farm payrolls, and we're pumping back up to the high of week level. And just reinforcing about what a well-engineered template looks like. We had a lot of volatility on the Wednesday, and we had PPI and FOMC on that particular day. So just some simple sort of understanding again, escalator up. We have the escalator up. And so I want you to also recognize the difference on these days where markets trade back and forth, and just understanding ACB. Just like non-farm payrolls, trading down into the lowest closing price of the month, and then a new 4-hour rotation starting on currency 9 a.m. and going to the close, ACB after major red news to the close of the day and the week. We start a new day and there's auction process back and forth. That's the whole idea about ACB. We want to target days where they're not coming back, and that comes back to the pump and dump escalator type of understanding, as well as dump and pump escalator elevator understanding. So we pump up and we break out again. And this is another key thing to train your eyes to notice, is looking for the breakout after the close and breakout at the extreme. That triggers new breakout traders into the markets. It gets higher time frames chasing that move. It gets smaller time frames chasing the trend. And then we engulf and trade sideways into our US window. Breakout, engulfment, coil sideways into our session window. Coiling sideways into our session window with a escalator, close and breakout at the extreme, high close of the month and the week, coiling sideways into our timing window. Now, CPI is typically a high impact news release. Now, we are on a 5-minute chart. Now, when traders have this understanding, the ideal entry is obviously just prior to the major red news. But with CPI, there's no way you could trade that without putting yourself at risk with any size. Now, traders, if they choose to get in before CPI, that's of their own choice. My approach would be to wait for the first minute to trade. And in some cases, that first minute could be at the same level the 5-minute chart is at. But the maximum stop loss on this particular entry after the news has been released would be at the high of that coil when the news was released. So we have our coil, we've got our overall bigger time frame template, we've got our pump, our engulfment, and our coil sideways into our session window at closing price at the high of the month level. We have major high impact news release. After the candle's release, remember I've talked about the 4 types of news candle entries, but after that first minute, I would be willing to position myself in the market with a worst case stop loss scenario, and then potentially adding additional positions in once that market has gone into consolidation at the beginning of our new 9 a.m. candle, which for currencies is the beginning of our new 4-hour rotation, with the understanding of holding that position to close. Now, currencies, typically there should be on average no more than 15 pips of risk on these trades. A few of the yen cross pairs may be higher, but this is about the template itself. In this particular case, the news acted as a catalyst on the way to completing this move. That traps all the volume up above the close of that candle, but waiting till after the news allows us to position ourselves in the market, still manage our risk, and hold that trade to the close. Wednesday close at the extreme, coil sideways, perfect template, but we had high impact major red news, which is going to occasionally come on a Thursday. But more importantly, about recognizing a textbook perfect template, an ACB template. Just a plain chart for visual reinforcement. We have the pump beginning late in the US window, the breakout, the coil sideways, the explosive collapse on CPI, the coil at the low of day level for the continuation into the close of the day. Now, a couple of weeks later, we had another opportunity, a market that broke out on our higher time frame, again closing in breakout as the highest closing price of the month. We took out the example we just saw where CPI was on the schedule, but we've closed in breakout again. The only difference with this particular scenario is that this is actually a Monday. We've come out of an inside day close on a Friday for the explosive breakout and closing at the highest closing price of the month and the week into a new week. Now, looking at our 4-hour chart, remembering that whenever we start a week, Monday, Tuesday can establish one of the extremes. And in this particular case, we've closed in breakout at the highest closing price of the month on a Monday. And you'll notice on our 4-hour time frame, after closing in breakout, we have 1, 2, 3 higher closes on our 4-hour time frame. So understanding rotation of our 4-hour timing cycle. So just reminding traders that when a market closes at the extreme in breakout, especially on the front side of a week, traders in different sessions are going to have these instruments come up on their watch list. Now, the euro, I don't think traditionally doesn't really offer traders in the Asian session that many opportunities. I'm sure it does randomly. But more importantly, obviously for Europe and London session traders, the euro is heavily traded in those markets and would come up on their watch list closing in breakout as the highest closing price of the month on the 3rd week of the month, week 3, blowing off through the high of month level. Now, on this particular day, we had French and German PMI flash services being released in the London window. Now, interestingly enough, we have an explosive breakout on Monday. There was no major news catalyst event or release, but we have a market now that's exploded and closed in breakout on no major red news. Potentially another alert to traders that this may be a false breakout. Importantly, though, again, just reinforcing building your muscle memory. We've closed in breakout. The market has broken out and coiled sideways at the extreme prior to our major red news release. When we go to our smaller time frame, our 5-minute chart, we can see the breakout and consolidation and a little pump and reversal just prior to our major red news release. Now remember, we've got a perfectly well-engineered pump and dump template heading into our Europe-London window, but we've got major red news on the calendar. The news is released, closing at closing price. And again, training your eyes to recognize trapped volume above that level. Trapped volume above that level. And the same process applies, taking a position, putting our max stop in place. Now my approach to this is placing the stop above the high of day level, or at the high of day level, with the thesis that they are not coming back. After that news catalyst, it acts as a first bar entry, trapping volume up high. This market is now preparing to go on a collapse range reversal back into the close of the day. And again, looking at where that pump began, heading into the close of the day. So we have our pump, our breakout again, our collapse, our entry opportunity after major red news is released in an ACB template, max stop loss, and a walk away, hold till close mentality. We have a max risk in place. We have our profit target in place, either from where the pump began or into the close. It's a hold till close ACB opportunity. Looking at a blank chart for your own visual muscle memory and reinforcement, the close and breakout at the extreme, the big pump, the coil sideways, the breakout again, the coil sideways, the collapse, positioning ourselves, another coil underneath of the low of day of the current day. That little sideways coil is getting ready to go on an explosive run. We'll continue these in the next video, traders.